stop scrolling. I am dead serious right now. Stop whatever you are doing and listen to me, because 47 minutes ago, the entire global financial system was just detonated, and most people have no idea what is about to hit them. It is Tuesday, January 20th, 2026, and I need you to remember this date because your children and grandchildren will ask you where you were when this happened. At exactly 12:47 p.m. Eastern Standard Time, Donald Trump walked into the Oval Office, fresh from his inauguration, picked up a pen, and signed a 17-page document that just bankrupted some of the biggest banks on planet Earth. I am not speculating. I'm not guessing. I have the documents. I have the timestamps. I have sources inside 3 major financial institutions who are telling me things right now that would make your blood run cold. By the time you finish watching this video, you will understand exactly why Deutsche Bank shares were halted today, why the COMEX just froze silver trading for only the 3rd time in history, and why the London silver fix that has operated every single day since 1897 simply did not happen this morning. But more importantly, you will understand what this means for your money, your savings, and your financial future, because what I am about to reveal will either make you very wealthy or it will destroy you. And the difference depends entirely on what you do in the next 72 hours. So let me start with the document that just changed everything. Executive Order 14298 is titled Securing America's Strategic Monetary Metals. And on page 11, buried in legal language that most journalists will never bother to read, is one sentence that sent every major bank into immediate cardiac arrest. That sentence authorizes the United States Treasury to purchase physical silver at a price not to exceed $600 per troy ounce. Now I need to let that sink in for a moment. $600. The official COMEX price right now shows $73.42. That means the President of the United States just officially declared that the real value of silver is 8 times higher than what the market is showing you. But here is what makes this even more insane, and I need you to pay extremely close attention to this part, because this is the detail that changes everything. The order specifically states that the $600 price applies only to verified physical delivery of investment-grade silver bullion. Paper contracts are explicitly excluded. Do you understand what Trump just did? He just told the entire world that paper silver is worthless and that only real physical metal has value. He just declared war on the entire paper manipulation scheme that has been suppressing silver prices for decades. And the banks that have been running that scheme are now facing total annihilation. Let me break down exactly what is in this executive order, because every single section is designed to systematically destroy the paper silver market. Section 1 declares silver as strategic defense critical material, which sounds boring until you realize that under the Defense Production Act of 1950, this gives the government absolute authority to seize, acquire, and control every ounce of silver in the United States. Section 2 establishes something called the Strategic Silver Reserve, with an initial acquisition target of 500 million ounces. Now here is where the math gets absolutely terrifying for the banks. The total registered inventory in all COMEX vaults as of yesterday was 18.3 million ounces. Trump just ordered the acquisition of 27 times more silver than actually exists in the entire COMEX system. This is not possible unless prices explode to levels that most people cannot even imagine. Section 3 establishes the $600 acquisition price for physical metal only. Section 4 grants Treasury the power to force domestic miners to sell directly to the government before fulfilling any private contracts. Section 5 establishes criminal penalties of 20 years in federal prison and fines up to $500 million for anyone caught manipulating silver prices. Section 6 creates a Department of Justice task force with full subpoena power to investigate historical price manipulation by major banks. Section 7 demands that 50 million ounces must be acquired within 90 days. Now you understand what the order says, but you still do not understand why banks are in complete meltdown mode right now. So let me explain what I have been warning about for 18 months on this channel. The death bag. If you have been following Boring Currency Archive, you already know what this means. But for those who are new, let me explain it in a way that will terrify you. 4 major banks have been selling paper silver contracts for years. These contracts obligate them to deliver physical silver to the buyer upon demand. The problem is they have been selling far more contracts than actual silver exists. As of the January 17th, Commitment of Traders report, just 3 days ago, these 4 banks held combined short positions totaling 215 million ounces. They are obligated to deliver 215 million ounces of silver that they do not have and cannot get. At the old paper price of $73, this represented a liability of about $15.7 billion. Massive, but survivable. But at Trump's new $600 acquisition price, that same position represents $129 billion in losses. $129 billion. Now let me show you why this is extinction level for these banks. Deutsche Bank has a total market capitalization of $24 billion. Their silver short position alone could now exceed their entire company value by a factor of 4 or 5. HSBC has been one of the largest silver shorts for over a decade. Bank of Nova Scotia has been a major player in precious metals manipulation since the 1990s. And JP Morgan, the biggest player of all, did something very interesting that I will reveal in a moment that suggests they knew exactly what was coming. But first, let me tell you what happened in the 3 hours after Trump signed that order, because this is where the real chaos began. At 1 p.m. Eastern, just 13 minutes after, the signing industrial buyers who had been waiting on the sidelines flooded the COMEX with delivery demands. Within 30 minutes, they had submitted requests for 47 million ounces. That is 2.5 times the total registered inventory. At 1:32 p.m., the COMEX did something it has only done twice before in its entire history. They halted all silver trading. The official statement said, extraordinary market conditions requiring assessment, but I have sources inside the exchange and they told me exactly why trading was really halted. When they froze the market, they looked at the order book and saw something that has never happened before. The bid side showed buyers willing to pay anywhere from $150 to $400 per ounce. The offer side was completely empty, not thin, not sparse, completely empty. Zero sellers at any price. There was no market. There was only buyers with no one willing to sell to them. This did not happen during the Hunt Brothers squeeze in 1980. This did not happen during the COVID crash in 2020. This has never happened in the history of commodities trading. At 2:15 p.m., the COMEX released a second statement announcing temporary modifications to delivery procedures, which is exchange speak, for we are about to invoke force majeure and cancel all contracts. Meanwhile, the physical market was going absolutely berserk. In Shanghai, the gold exchange halted silver trading at 3:14 a.m. local time after prices rocketed past $240. In Tokyo, dealers are currently quoting $375 for immediate physical delivery. In Dubai, premiums have exceeded $400. And in London, something happened that has not occurred since Queen Victoria was on the throne. The LBMA suspended silver price benchmarking entirely. The London Fix, that has set global silver prices twice daily since 1897, did not happen today. For the first time in 129 years, there is no official London silver price. The paper market says $73. The physical market says $300 to $400. Which number do you think is real? Now, let me tell you what is happening inside the banks right now, because this is information you will not hear anywhere else. I have spoken with 3 separate sources inside major financial institutions in the past 4 hours. They describe scenes of absolute panic. Emergency meetings began at 1 p.m. Eastern. Risk management teams have been locked in windowless conference rooms. All external communication has been banned. Cell phones have been confiscated. Legal teams are on standby. The 4 banks holding the death bag are facing combined losses that could exceed $100 billion, and there is no way out. Emergency calls have been established between the Federal Reserve, the European Central Bank, and the Bank of England. The only question being discussed is who absorbs the losses. There are only 3 options, and all of them are catastrophic. Option 1, the banks cover at market prices, which means multiple major banks go bankrupt, and 2008 happens all over again, but worse. Option 2, central banks bail them out, which means taxpayers eat $100 billion plus in losses, and inflation explodes. Option 3, governments freeze markets and impose price controls, which saves the banks, but destroys all confidence in Western financial markets. There is no good outcome. But here is something that should make you extremely suspicious. JP Morgan appears to have known this was coming. Over the past 90 days, while other banks maintained their massive short positions, JP Morgan quietly reduced theirs. They took physical delivery of approximately 12 million ounces. They closed nearly 40% of their paper shorts. They positioned themselves on the long side. The question is, how did they know? And the Department of Justice task force created by Section 6 of the executive order is going to be very interested in the answer. At 3:45 p.m., trading in Deutsche Bank shares was halted on the Frankfurt Stock Exchange without explanation. You do not need an explanation. The death bag is detonating and Deutsche Bank is standing at ground zero. The global response has been immediate and dramatic. China just banned all silver exports effective immediately. 44 companies are on a restricted list. 25% of global silver processing capacity just vanished from the market. India has implemented similar restrictions and authorized emergency purchases at $500 per ounce. The bond market knows exactly what is coming. 10-year Treasury yields spiked 47 basis points in a single session. That is the largest move since the 1987 crash. Investors are pricing in bailouts and money printing and inflation because they understand what happens next, even if the mainstream financial media refuses to tell you. So let me tell you exactly what happens from here. Within 24 hours, the COMEX will invoke force majeure. All paper silver contracts will be forcibly cash settled at whatever price the exchange decides, probably around $100 to $150. Lawsuits will be filed within hours. Within 72 hours, at least one major European bank will require emergency intervention. Deutsche Bank is the most likely candidate. The ECB will face an impossible choice between the largest bailout in history or letting systemic contagion spread across the entire European banking system. Within 1 week, physical silver will be completely unobtainable in Western markets. Dealers will have nothing to sell. Industrial users like Samsung, Tesla, and the Pentagon will be forced to negotiate directly with miners at prices determined by private bidding. Within 30 days, we will be living in a two-tier monetary system. The official paper price will still exist on screens, showing some arbitrary number, while the real physical price operates in a completely separate market. The gap between those two numbers will tell you exactly how dead the old financial system really is. Within 90 days, the Strategic Silver Reserve will have acquired its 50 million ounces at prices between $400 and $600, permanently establishing a new floor that can never be broken. Now I need to speak to you directly. If you own physical silver, listen to me very carefully. Do not sell. Do not trade it for paper. Do not let anyone convince you that the $73 price on the screen is real. The President of the United States just authorized the Treasury to pay $600 per ounce. That is the official government valuation. Everything else is a manipulation that just ended today. If you do not own physical silver, I am not here to tell you what to do. I am only here to tell you what is happening. The window is closing. Within days, possibly hours, physical silver will either be unavailable at any price or it will cost multiples of what it costs today. What you do with that information is entirely your decision. This is Tuesday, January 20th, 2026, the day Donald Trump detonated the death bag, the day paper silver died, the day the biggest banks in the world discovered their short positions had become financial death sentences, the day silver was officially remonetized by executive order of the United States government. Decades from now, historians will mark this as the dividing line between the old monetary system and whatever comes next. You are watching it happen in real time, and you cannot say you were not warned. This is Boring Currency Archive. Subscribe and turn on notifications because the next 72 hours will be the most volatile in financial market history, and I will be here documenting every minute of it. Stay vigilant and stay physical.